If you've been watching my channel for a while, you know how much of a fan I am of trading earnings. This is something that I've been doing for quite a lot of time now. I've been trading earnings every quarter, and this is something that I do quite regularly. And I'm always in the search of trying to find new tools or new websites that could help me trade earnings in a better way. And I actually found a new website and I didn't know about it. And actually that quite blew my mind because of the amount of information that is available on that website. Hence why I wanted to make this video, because I wanted to share with you this tool. So hopefully if you also like to trade earnings, this will be helpful for you. But before we dive into the tool, maybe for those who don't know what earnings are, let's do a small recap. Earnings are basically announcements that companies make, that publicly traded companies make every quarter. Basically every quarter publicly traded companies are releasing how much revenue they have earned during the last financial quarter, and this is a time where there is usually a lot of speculations. Analysts are trying to know, for example, what is the earning per share, which is a very famous indicator of how much a company is earning per share. And earnings are very big moments in terms of speculation, and also brings a lot of volatility in terms of options trading. And because there is volatility, there is also opportunity. And I'm sure that if you've been into options, you must have heard someone at least talk about trading earnings, regardless if it's by selling what we call short strangles like I do, or maybe buying some calls and puts. But regardless, I'm sure that you have heard about earnings. And because there's so much speculation around earnings, and because so many people are trying to take advantage of earnings, well, there is actually a lot of money to be made if you manage to actually trade earnings the right way. And if you're not aware on how I trade earnings, I really encourage you to watch this video that you can see right now. The link will be in the description of this video. I'm basically describing everything on how I trade earnings, what is my strategy, what is the thing that I'm looking at. So hopefully if you don't know how I trade earnings, don't hesitate to check it out, and hopefully it will be helpful for you. But as I said, I'm always a big fan of trying to find some new tools, some new websites that could maybe help me have some more information about earning trades. And I actually found one that I wanted to share with you because I think it's really interesting. So without waiting, let's get into the website so I can show you all of this. So we are in the website right now. The website is called EarningStats. You will have the link of that website in the description of this video. So what you can see, first of all, when you arrive on that page, is that you have a lot of information at first. So the way we're going to look at this is that you can see that, first of all, at the top left corner, you can see that there is a field called select a stock, and you can see that there is Amazon in there. And basically what it's going to do is that it's going to help you know all of the different information about Amazon, and especially Amazon earnings. For example, if I decide to choose another stock, let's say that I choose C from the stock ticker Citibank, well, you can see that now I can have different information. So you can see that you can switch from stock to have different information. But what does all of this mean? So for example, once you have chosen the stock C, you can see that you have, for example, the expected move over time. So what that means, it means that the expected move that we were expecting of Citibank during its earnings, you can see how it has been evolving over time. For example, you can see that in 2005, it was of around 1.6%, meaning that we expect a move of 1.6% of the stock price, either up or down. Then you can see how it's been evolving toward 2004. And of course, with the financial crisis, we can see that the expected move has been growing, meaning that in 2008 or 2009, actually, we were expecting an expected move of 25% either up or down. So you can see that it's actually quite a lot. If we expect an expected move of 25%, meaning that if you have a stock of $100, it means that we're expecting a move of $25 either up or down. So you can see that it's actually quite big. And then you can see that over time, the expected move came back down. But it's actually not that piece of information that is really interesting. For example, if we look at down there, you can see that you have the average expected move and the average actual move. And this is really interesting to see, because what you can see for Citibank, you can see that the average expected move was of 3.9%, but the average actual move was of 2.2%. So what does that mean? Well, if the expected move is bigger than the average actual move, that means that we're usually expecting too much compared to what actually happens. And for those who are used to trade earnings, you know where I'm going there. If you, for example, decide to sell a short strangle, the short strangle is a strategy where you bet that the stock price is staying within a certain range. You sell a call and you sell a put at the same time. Because you bet that, for example, the stock price is staying within a range, then in that case, it makes sense to trade a stock where the average actual move is less than what we actually expect. And another way of visualizing this, you can see that 81% of the time, Citibank has stayed within expected move compared to 90% of the time where it actually went outside of the expected move. So you can see that it's actually quite interesting, because because now you have actually a tool that is allowing you to know how often does the stock stays within expected move and how often does the stock go out of that expected move. And another key piece of information that I really like is that EarningStats rank. So basically what that means is that EarningStats are ranking how often does the stock stays within expected move or how often does it go out. And the more it stays in, the better the rank. Meaning that if you have a stock that, for example, has an EarningStats rank of 9 out of 10, it means that very often it's actually going to stay within expected move. Meaning that you can trust in a way the expected move much more than a stock that wouldn't stay within expected move. And to show you an example of a stock that doesn't really often stays within the expected move, I chose Facebook, as you can see at the top. And what you can see is that the EarningStat rank is not at all the same as before. Before, for Citibank, we had a rank of 9 out of 10, and now we are at a rank of basically 2 out of 10, meaning that it really doesn't stay often within the expected move. And actually, you can see that where it stays within an expected move 50% of the time, and it goes out 44% of the time. And when you look at the average expected move versus the average actual move, you can see that the average expected move is usually of 6% and the average actual move is usually of 6.2%, meaning that usually Facebook is going to move more compared to what we expected, which can be bad if you're, for example, selling, as I said before, a short strangle and you bet that the stock is staying within a range, while Facebook might not be the best stock to use that strategy for, because as you can see, it usually moves more compared to what we expect. So that's why this website is actually quite useful, because you can have some information on what is the average expected move, what is the average actual move, and you can really get some nice information from there. But it's not over. There is plenty more of information. If we go down, and you can see that we are at the page 2 out of 9. If we click on the next page, now we're going to arrive on a page where we have much more data in terms of total earnings events analyzed. As you can see, for example, you can see that the total number of earning events analyzed are 34. You can see that the number of times where earnings are going up is of 22. Then the number of earnings down is 12, meaning that it's 65% of the time it goes up. Then you can see in detail that there are 19 times where it stays within the expected moves, 15 times where it goes out, which means 56% of the time it stays within the range. And after that, you can have more information in terms of how big is the move. For example, the number of times where the stock goes twice as much compared to what is expected is of around 9%, meaning that 9% of the time we're going to see Facebook moving twice as much compared to the expected move. So that can give you some nice information on what can you expect from, for example, Facebook during its earnings. How many times can you expect it to go, for example, up or down or outside, inside, and how much outside and how much inside. So for example, if we look exactly at this block, we can see that this block is named outside the expected move stats, meaning that the number of times where it did double the expected move is 3 times, meaning that 3 times Facebook went double the expected move. Then if we go on to the next page, let's see what we have. Well, you can see that you have even more information actually about Facebook or any other stock that you actually want to analyze. I don't know why I'm just sticking to Facebook, but you get my point. If there is another stock that you want to analyze, just put it at the top and then you're going to be able to see all of the data for that particular stock. On that page, what we're seeing is basically they have a watch list. EarningStats, that website, has a watch list of stocks, and then you can see quarter per quarter, like since basically 2003 until 2021, how many times stock stays within the expected moves, how many times do they go out, and you can have, like, based on their watch list, like all of this different information. Then when we go into the next page, you basically have like the same data that you've seen for Facebook, but in a more visual way. You can see the actual versus expected move frequency, but you can also see it in a more visual way in terms of magnitude of the movement. If we look at, for example, this block, you can see the actual versus expected move ratio, and that is going to help you understand how much actually Facebook moves. In that example, how much does the stock move during its earnings? And what we can see is that, for example, in 2018, we can see that the stock went down quite a lot. So that's how this graph can help you understand how Facebook moves. I pulled up the chart of Facebook so as to show you what is that big down move that we just saw before. So if we look at, for example, the 2018 chart for Facebook, you can see that indeed the stock moved quite a lot during its earnings. If we look, you can see that the stock went from $217 to $175 overnight. And actually, I think I remember that day. So you can see how useful that can be, because now you have so much data in terms of how the stock is moving, what does it do during its earnings, and all of this is for free. I really invite you to check out this page that is basically the 6th page where you can see all of the data and how they calculate that EarningStats rank. And you can choose, for example, other stocks, like let's say you choose Apple, and you can see the EarningStats rank and you can see how it's calculated and what does that mean exactly. On the 7th page, what's really interesting is that you can see their watch list and you can see visually how many stocks are actually staying within the expected move and how many stocks are going outside of the expected move. And you can see that visually. So for example, we can see that on the x-axis you have the expected move, and then on the y-axis you have the actual move. And what's quite interesting is that, for example, we can see that IBM had an expected move of almost 300%, but it actually moved between, let's say, minus 75%. So that's actually quite interesting. And you can see that on the left you have all of the different quarters, all of the different years. So let's say that you click on the Q3 of 2020 and it's going to load all of the different data for that watch list. What's in green means that the stock stayed within the expected move, and if it's in red, it means that it went outside of the expected move. And personally, I'm a big fan of this. I love to see things visually, and for example, if you're looking for a stock that usually stays within the expected move, you can always click on the different quarters and see how the stocks behaved during the different quarters, and I think it's really interesting. And then on the 8th page, another way of actually seeing data, you can see, for example, you have all of those different boxes, and if you click on one of them, it's going to show you the different stocks based on the filter that you chose. For example, the percent of earnings that move higher, if you click on it, you can see all of the stocks that are going higher, and then you can filter them based on what you want. So that's actually quite interesting, and you can see them that they are ranked within this chart, meaning that the top one is AVGO, and then it goes down like this. So you can see that it's actually quite nice to see it in another way. It's more visual and it's quite pleasant to watch. After that, I also look at the platform Predicting Alpha to look at earnings and how the stocks are moving. So for example, I chose Facebook within the Predicting Alpha platform. By the way, if you want to sign up, there'll be a link, the first link in the description. You'll have a free trial for the platform. So if you want to check it out, don't hesitate to go in the description. For example, you can see that on Facebook, the average implied move is of 5.53%, and usually the average move what we actually see in the market is of 4.84%. And that's quite interesting because you can see what is the implied move, and then you can see what is the actual move, and you can see basically a backtest of a long straddle and how it would have performed earnings after earnings. So that's quite interesting to see all of this. Then after that, you also have the earning distribution in terms of implied move and realized move, so you can see how it differs. And you can also compare, for example, Facebook against its industry in terms of sector, and you can see the implied move over time. So you can see that there is quite a lot of information there. I hope you'll have enjoyed this video where I shared this tool. I think this type of tool are usually very good because it helps retail traders access more information, and by having more information, by having more knowledge on how a stock is moving during its earnings, it helps you make more informed decisions. And I think in the end, it's all about making more informed decisions. You want to know what you're getting into when you're placing a trade, and all of these type of tools, free or not, are helping you basically place more informed decisions. So I think that's quite nice. Don't forget that to check out, for example, the Predicting Alpha platform, you can go into the description. There'll be a link when you can sign up for a 14-day free trial. Otherwise, for the link of the EarningStat website that's free, you can check out in the description. That'll also be there. If you have any question or any comment, I'll be happy to answer any question or any comment that you might have. Please make good and informed decisions. I'll see you in the next video, and in the meantime, I wish you all the best.